Hey everyone, and welcome to this explainer. Today, we're jumping straight into something absolutely crucial. If you've ever looked at the financial world and thought, whoa, that's way too overwhelming, well, you are right where you need to be. We're unpacking the complete roadmap to stock market mastery. And hey, think of this not as some boring textbook, but like your personal GPS. We're going to navigate this whole thing together from the bare bones basics all the way to advanced trading psychology. It's going to be a fun ride. So, here's our ultimate roadmap for today. We're laying down the foundational blueprint, decoding the actual market data, building out wealth strategies, exploring a few advanced concepts, and finally, and this is a big one, mastering your mindset. Okay, let's dive into this, because we really need to clear up a massive misconception from the get-go. What is the stock market really? Movies love to show it as this chaotic, high-stakes casino, right? But fun fact, the world's very first stock market started way back in the 1600s with the Dutch East India Company. And the core idea? It hasn't changed a bit. It is, at its heart, a dynamic wealth-building engine. It's just a highly efficient system letting everyday people like us buy partial ownership in real, breathing companies. When they grow, your wealth grows. It literally is that fundamental. All right, phase one, the stock market blueprint. Let's get under the hood and look at the basic mechanics, like the NSE, BSE, Sensex, and Nifty. Now, to actually understand how this whole ecosystem ticks, you kind of need to know who you're trading alongside. The market basically splits into three main camps. You've got retail investors, that's you, me, the everyday folks. Then we've got DIIs, domestic institutional investors, which are your large local funds. And lastly, FIIs, the foreign institutional investors. Figuring out how these massive, heavy-hitting institutional players move their cash, that's your first major key to understanding market momentum. So how do we actually jump in? Honestly, getting started today is incredibly frictionless. Step one, you just open a Demat account to hold your digital shares. Step two is linking a trading account to actually execute your buys and sells. And step three, that's just learning your basic commands or order types. A market order buys right then and there. A limit order lets you name your specific price. And a stop loss? That's your safety net, automatically selling if the price drops too much. It's really just learning the controls of the game. But wait, before you go clicking buy, you've got to make a choice. Are you investing or are you trading? See, investing is the long game. It's about buying solid companies and letting the magic of compounding build your wealth over years. Trading, on the other hand, is active. You're in the weeds, aiming for short-term profits off daily or weekly price swings. Both are totally valid, for sure, but they require a completely different set of tools and a vastly different time commitment. Moving on to part two, decoding the market data. Now, what's really interesting here is how we gather our analytical toolkit to pick the real winners. Let's talk about the why. Why pick a certain stock? That's where fundamental analysis comes in. We're looking at core metrics pulled straight from a company's financials. You've got the PE ratio, which basically tells us if a stock is surprisingly cheap or way too expensive compared to what it earns. Then there's EPS, earnings per share, which tracks straight-up profitability. ROE, return on equity, shows how smart they are with their money. And debt to equity shows us their financial risk. This is exactly how you pop the hood and see if the engine is actually any good. And using those metrics helps you spot exactly what kind of beast you're dealing with. Are we looking at growth stocks? These guys expand like wildfire, usually pouring every cent back into the business. Or are we talking value stocks? These are your steady, established players currently flying under the radar, priced below their actual worth. But hey, whichever you choose, you absolutely have to look at the people running the show. A brilliant company can be run into the ground in no time by terrible leadership. So, if fundamental analysis tells you what to buy, technical analysis tells you when to pull the trigger. Setting up a trade usually happens in a few clear steps. First off, you spot support and resistance. Think of these as invisible floors and ceilings where prices predictably bounce. Next up, you draw trend lines to catch the broader vibe, the direction the asset is heading. And finally, you confirm your gut feeling using moving averages to filter out all that daily static. Really, it's just about spotting visual patterns in human behavior. To do this without losing your mind, you need a streamlined toolkit. Here are the essentials. Candlestick charts give you the price action for a specific time frame in one glance. RSI tells you if a stock is getting overbought or oversold. MACD is your go-to for spotting shifts in momentum. And basic chart patterns, those give you predictable, repeatable setups. Keep it simple. You seriously don't need 100 complicated tools, just a few reliable ones you know inside and out. All right, on to part three, strategies for building wealth. We've got our tools, and now it's time to translate all that raw data into serious strategic action. Active trading definitely sits on a spectrum. You've got intraday trading, buying and selling on the exact same day, meaning absolutely zero overnight risk. Then there's swing trading, which spans a few days or weeks to catch a specific wave of momentum. Positional trading is the longer play, holding for months to ride massive trends. But listen to this last one because it is literally non-negotiable: risk management. Using stop losses and having strict profit targets is the exact dividing line between a professional trader and someone just treating the market like a slot machine. And this brilliantly illustrates the flip side of active trading, the mind-blowing power of long-term compounding. This right here is the ultimate multiplier. Think about it. If you park just a few $100s a month into an average market return, over a couple of decades, that turns into millions. When you invest, earn a return, and then earn a return on that return, your growth goes totally exponential. Seriously, time in the market will almost always crush trying to time the market. So how do we actually harness that crazy compounding power? It comes down to a few disciplined steps. First, set up a CIP, a systematic investment plan, into stocks. This automates your investing, completely ignoring whether the market is having a good day or a bad day. Step 2, lean into dividend investing. Take those regular cash payouts from companies and plow them straight back in. And step 3, master portfolio building to keep yourself safely diversified. It is a slow, steady, incredibly effective march toward wealth. Let's move to part 4 and see how this builds into exploring advanced market concepts. Once you're comfortable with the basics, it's time to seriously level up your financial literacy. Let's quickly demystify some of those jargon-heavy instruments you always hear about on financial news. Futures and options, those are derivatives that let you hedge your risk or really leverage your positions. Mutual funds offer instant, professionally managed diversification, unlike picking single stocks. Then you've got ETFs, which brilliantly combine the easy trading of a stock with the wide net of a mutual fund. And IPOs, that's getting in on a company the exact moment it goes public. Grasping these concepts gives you a massive edge. But hey, beyond the assets themselves, there are some really critical, everyday optimizations you have to think about. You've got to find the trading apps and platforms that actually match your style. You desperately need to understand how to handle the taxes on your market income because remember, it's not what you make, it's what you keep. And the end goal? Synthesizing all of this into a bulletproof monthly plan that generates a lifelong loop of truly passive income. Which brings us to our final and honestly most important phase, mastering your trading mindset. Because you can have the most advanced data in the world, but if your psychology is a mess, the market will humble you. And that leads to this huge realization. You have the tools, but do you have the discipline? Trading and investing, it's like 20% mechanics and 80% psychology. The second your own hard-earned cash is actually on the line, the way your brain processes information completely rewires itself. At the end of the day, the entire market is basically a massive tug-of-war between two very primal emotions, fear and greed. Fear makes you panic sell at the absolute bottom of a dip. Greed, that makes you over-leverage and buy right at the peak of a hype bubble. Being able to spot when you're acting out of fear or greed, instead of sticking to your actual game plan, that is the secret sauce to keeping your portfolio intact. So the crucial point here is actively building an emotion control toolkit. How? First, deliberately study and avoid the classic beginner traps. Second, force logic back into your brain by keeping a trading journal. Write down exactly why you entered and exited every single trade. And third, be incredibly patient. Over time, these habits physically rewire your brain to build a real wealth mindset. You'll become totally immune to all that distracting daily noise. Now, mastering this roadmap doesn't just stop at the theory. The final stage is all about live, practical application. You have to transition into the real world, doing actual stock analysis, live chart reading, rigorous portfolio reviews, and studying historical case studies. You only truly learn by getting your hands dirty and applying these strategies and this mindset in a live, unpredictable environment. We've covered a ton today, from basic mechanics all the way up to deep psychological discipline. Remember, the market is not a casino. It's a phenomenal engine for anyone willing to learn its language. So, looking at this massive blueprint we've just laid out, what is the very first step you are going to take today to claim your financial freedom? Give that some thought. Thank you so much for joining me for this explainer, and I'll catch you in the next one.